And today Regan Boychuk is going to take us through a presentation that he calls Myths and Realities of the Oil Patch at $50 a barrel. Because depending on who you talk to, you hear whole different stories in the oil patch. So he's going to allow some time at the end. We've booked, I think, a half an hour, and there'll be time at the end for questions. Sure. All right, take it away.
Thanks. So I think just about everybody in the room is old enough to remember the last time oil was $50 a barrel. It's not that long ago. It's not that foreign an idea to the province, but it's endlessly portrayed in the media that this is some sort of groundbreaking new disaster. Everyone is struggling, nobody is making any money, and that is a long distance from the truth. So I want to talk about a couple of myths that are related to that. The first one is that nobody makes any money at $50 a barrel. That's why tens of thousands of people have been laid off, and a lot of people are struggling in Alberta, but that's not even remotely true. And I'll walk through a little bit about that. The second one seems like a contradiction to the first, but luckily this isn't a minute-and-a-half TV news segment. I have a half hour to walk through and explain. By the end you'll understand what I mean and what that means for Alberta, and hopefully by the end exposing these myths will help us understand what's going on in the province today, what's preventing the NDP government from listening to common sense and facts on some of these issues, and from there we can work towards some of the solutions. And so, just to start with, this is inflation-adjusted price of oil. And so you can see what the price of oil has been for the last 60 years, and we're back around $50 today. It's not dramatically different than it was through much of the 80s and 90s. It's only in the previous 10 years that it really spiked above that, and even that wasn't unprecedented. Once you adjust it for inflation, you get a much better sense of being able to compare it over time, and $50 a barrel is not unprecedented. In fact, the only decent royalty review the province has ever had in 2007 was based entirely on $50 a barrel oil. That was the basis for all their calculations, all their projections, all they're saying there's a lot of money being made, there's a lot of room for us to collect more. That was based on $50 a barrel for eternity. There was huge room to finance huge expansion of the oil sands, and we could collect many times more royalties. It was all based on $50 a barrel. Everyone has conveniently forgotten that to portray this as some sort of new catastrophe. It isn't. And it's pretty much the same story with natural gas. $3 for natural gas is pretty much what it's always been, going back for decades. It's not anything dramatically different. The only thing that's changed is we no longer get paid anything for it. Albertans collect just about nothing we're still one of the world's largest natural gas producers. We still produce more oil than most members of OPEC. We just don't get paid anything for it. That's the crisis. It has nothing to do with the price of the resources. That's not the problem. It's how much Albertans get paid for it. And the biggest part of that problem came in 2010. In 2007, we had an excellent royalty review. They had very mild recommendations, and there was an enormous backlash from industry, complaining about anything being higher. It led to royalty cuts in 2008, multiple royalty cuts in 2009. In 2010, they had another royalty review. This time it excluded the public. This time it was organized by industry, it only involved industry, and they came up with dramatic royalty cuts. All of it designed to encourage fracking. This is from a Scotiabank report. There's very little research that's publicly available. This isn't for public consumption. This was a report to investors. But they put out this report 3 days after the NDP was elected. When the NDP won the election, 3 days later they put out this report to investors called Not Least Crew, looking at how dramatic the royalty cuts were in 2010, because everyone assumed that was over. All this is about to disappear. Now the NDP's in power. They are going to turn back the clock on all these royalty cuts. And it's a little bit small and complicated, but This is the most important chart. This is breaking even, and these are a whole bunch of different plays across Alberta, oil and gas fields, and this is before the royalty cut to 2010. This red is how much money they lost. So like this field wasn't getting developed because you would lose money at, this is for $60 a barrel and $3 for natural gas. Lose money, lose money, lose money, lose money. After the 2010 royalty cuts, this is the difference. This is how profitable all those areas became, even at $60. Most of the time since then, it's been much above $60.
So Regan, stop those lines at the top where there's nothing on the one side.
Well,
are those fields where they weren't losing anything?
Yeah, so they were making some money. After the royalty cuts, they made that much more.
Okay.
Some of them were pretty close. And the reason this is such an amazing little chart, you can't see it, but the name, this is Catwa. It's in the Montney near Fox Creek. It's one little field. And we'll just make a note of that for later. It lost an enormous amount of money. It couldn't be developed until the huge royalty cuts in 2010, which is the entire reason the province is broke. These royalty cuts are huge. That's why we're broke. That's why we have a $10 billion deficit. That's why we collect almost nothing. This year it's going to be less than $2 billion in resources. We're one of the world's biggest producers. No one on earth charges as little as we do. Huge changes came in 2010. Made that giant swing. This is another example from over the last year. I worked with a bunch of the leading royalty experts in Alberta. This is Barry Rogers. He was the executive director of Alberta Energy, led the department. He was in charge of organizing the 2007 royalty review and the 2010 royalty review. He's now an international consultant, one of the leading in the world. He's the co-author of a bookshelf study of the royalty regimes of every jurisdiction on earth, all 500 of them. He is absolutely, bar none, the world's leading expert on Alberta royalties. He put this together. Everyone talks about how dramatic, how great everything is in the US. Alberta can't compete. These are some numbers he put together from MAH02811's report. MAH02811 is a big player in the States and a huge player here in Alberta. Comparing these first two are in Alberta. These next two are the two main fields in the States that have the most activity, produce more oil than all of Canada. The rate of return on their investment in Alberta, 40 to 100% or over 90%. That's an absolutely incredible profit. It's actually twice what they get in the States. They're major producers. They have a lot of rights all over the States. They have very profitable operations there, but they are incredibly profitable here. Despite the oil patch is always going to whine and complain they make no money. It has no relation to reality. They make their money off a public resource. If we think they're making money, we're going to want some of it because it's our oil and gas. Just as a rule, it has no basis. They're always going to say they make no money. Times are so tough. We're broke. It's so expensive. There's no money. Because then we don't ask them for any of it. There's no relation to reality. It's constant. They said the same thing during the 2007 round review. Oh, we're so expensive, we make no money. Those were the most profitable years in the entire history of the Alberta oil patch. They were making money hand over fist, and everyone in Alberta knew it. That's why we had a royalty review. Everyone who's involved in knowledge knows how much money they make, knows how responsible they are, knows how much money is being thrown around. Albertans know that. That's the reason we had to work. They're always going to complain, but it has no basis in reality. If we want to get an idea of how much money there is to be made at $50 a barrel, this is a pretty good place to look. This report came out in January 2015, 6 months into the price crash. Can Oils is an industry consultant. They consolidate all sorts of industry data to help with investment decisions of the industry, and they wrote this report. They looked at, I forget how many, it was like 60 Alberta companies in great detail, all of their financial statements, going through how viable they were at $50, because the media was screaming like this was Armageddon. No one can make a nickel. And their conclusions were pretty dramatic. They said at $60, there's little incentive to cut production, to cut dividends, or undertake any drastic portfolio assessments based on revenue or costs alone. $60 oil will not cause any great shakeup in the oil and gas short term. Even at $50, over 95% of the 50 companies could cover their cash costs, and there's no real incentive to cut production from current levels, and that the impact of the fall in price on operations in those 50 companies is very short-term and in fact quite minimal. They said all 50 companies they looked at in great detail, they're going to be just fine at $50. But like every single report that has anything to do with the oil industry, there's a huge amount of fraud involved, even in this report. Those are the conclusions they came to looking at 50 companies in great detail. But if you look at it really carefully, that was based on the assumption that at $50, that was with those companies still paying $100 royalties. The royalty rate they paid $100, they just assumed those for 50 because it was just easier. Even doing that, all the companies are just fine. They also assumed all the prices, all the costs for all the services, all the expenses of the oil companies that they paid were going to be the same at $50 as they were at $100. So assuming none of their costs changed, they were still going to be great. In reality, royalties have fallen dramatically from $100 to $50. And the same thing with all the oil companies' costs, all the services. They've squeezed the service sector exponentially for the last 3 years. In 2014, they squeezed costs 30% out of them. Again, in 2015, they squeezed another 30% reduction in all their costs from the service sector. They've done again this year. They're all dramatically more profitable than they were at 100, but this assumed all the same costs back down and still said they're going to be just fine. There's an enormous amount of money being made today at $50 a barrel, but they would never admit it. It's always to their advantage to claim poor and to ask for more handouts, in no small part because they get them. This is a chart that another friend made, Jim Roy. He's another international royalty consultant, works all over the world. He was in charge of royalties under Premier Getty. He ran the royalty reviews in the late 90s and late 80s and early 90s. Alberta, BC, and Saskatchewan are a league of their own on earth. No one even comes close to charging as little in royalties as our three provinces do. And naturally, Alberta leads the pack. These three different lines are the three different provinces. And it takes all the resources together and the rates, everything, oil, gas, and bitumen all paid together. And it shows how dramatically they've dropped since Ralph Klein's days. That's why we're broke. That's why we don't have any money. We can't afford anything. We have huge deficits. And you can see BC quickly chasing us down. They're small. Both BC and Saskatchewan are tiny compared to Alberta. They have relatively tiny resources, relatively tiny production, but they're competing with Alberta, so it's a race to the bottom of who can lower their royalties the most. We are the champions, but they chased us. And the other two lines that Barry Rogers added to this show the US rates. The average is 20%. In Alberta, we're down at 5%. And these are old. We're way below 5% today. It was 3.6. It was about 3.6% in 2015, and it's since gone down. We're closer to 2%, if not below 2% now. And the NDP's royalty review lowered royalties further and introduced additional subsidy programs. So we're below that. But in the States, the average is 20. Nobody charges less than 15, and that's like looking up at the ceiling, the floor in the States. So that was mostly focused on the conventional sector. Crude oil and natural gas are fair bit different than the oil sands. Completely different royalty regimes and stuff. But this chart was in a financial filing of Tech Resources, which is a huge company, operates all over the world, but has a bunch of stuff in the oil sands. And this is Bank of Montreal data, and it shows a bunch of our main competitors, some of those same fields that we had before, and it shows oil sands mining and oil sands in situ. In situ is the vast majority of production in Alberta. It's well over 2 million barrels a day. We produce more from in situ than most OPEC producers. And look at so that the blue chart across the top is where prices are these days, $40 to $50 a barrel. And look where the costs are. For 2 million barrels a day of Alberta production, they're $22 a barrel. That's how much it costs them to produce.
Which is the cost, Regan? Is that the purple?
These are the stack. All of them adds up to the stack. And this is the current price of oil. So this whole here
Is what it
a
costs? Okay.
So even today, even at the low, last February prices hit their absolute bottom. They got to $26 a barrel. After you factor in the exchange rate, nobody lost any money. It was millions of barrels. They all cried poor. It was Armageddon. They laid off tons of people, changed lots of their far-fetched plans for the future. But no one ever lost a dollar. Canadian production, that's the Canadian average of the cost to produce is $22 a barrel. Canadian, after the exchange rate, there's enormous amounts of money being made today. I was part of the expert group advising the royalty review panel on oil sands. And I think I was there because they never had the slightest intention of looking at anything or changing anything about the oil sands. Their entire consideration of how much money is being made in the oil patch, how the royalty regime works, how much they collect, came down to Peter Terzakian asking, so has anyone got any problem with the current regime? Okay, we'll keep it like that and move on. They had no data, no analysis at all. They had no intention of changing any of it. We're broke. They had a royalty review. There's $30 a barrel in profit being made today on 2 million barrels every day. And they never looked at anything, concluded there's not another dollar here for Albertans. Everything's great the way it is. We have some new subsidy programs for crude oil and natural gas, but other than that, that's the conclusion they came to. Sanibus is one of the biggest operators in the oil sands, a huge SAGD producer. And these are some numbers that Brent put together from their financial filings. This is from the second quarter of 2016. This is the bottom of the oil price. This is the 3 months after oil hit $26 a barrel. And it shows their operating cost per barrel. How much does it cost them to produce the 100,000 barrels a day they produce in the oil sands? It cost them $8.04. Everything after that is profit. There's an enormous amount of profit involved. How much do they pay in royalties at that? That's why we collect so little. They pay 23 cents a barrel in royalties. Today oil's selling for $50 a barrel. They don't pay a quarter. We don't get a quarter in return for our resources. When prices were higher a year earlier, they were paying 28 cents. That's why we don't. There's millions of barrels of oil being produced on a daily basis. That's how little we get for it. That's why the province is broke. And so even at the bottom, $26 a barrel, that's the lowest oil's been in decades. They were still making $11.50 a barrel in profit after all their expenses, after all their royalties. They're going to cry poor as a rule, but there's an enormous amount of money being made. And so that was the first myth, that nobody's making any money at $50 a barrel. We're still producing $80 billion a day. $80 billion a year, even at these low prices, of our natural resources are being produced every day. Every year in Alberta. So this year, even with the lower gas prices lower, oil prices lower, Alberta is still producing $80 billion worth of oil, gas, and bitumen every year. The problem is we're getting $1 billion as the owners of it. There's 70, 80 billions of dollars that's going to the companies. It's covering their costs, covering their dividends, their share buybacks, the executive pay. There's an enormous amount of money, but we collect so little of it. And they portray that nobody makes any money at $50. There's an enormous amount of money being made, even at $50. You can only imagine the kind of money they were making when it was 100. Some of the costs were higher, but those are mostly being spent within the industry. It's different parts of the industry getting paid inflated prices. The other main myth that I wanted to address, which helps explain how we got to such a ridiculous situation, is that the industry as a whole is profitable. I'm just going to leave aside the oil sands for a moment to talk about the century-old oil and gas industry in Alberta, the bedrock of much of our province, and that the idea that it makes any money is wrong. They're taking a lot of profits, but they're creating an enormous amount of environmental liabilities for which there's no money set aside to clean up, and there's no timelines to require them to clean any of it up. And for the first century of the oil and gas industry in Alberta, you made a mess, you went bankrupt and walked away. There was no other controls, there was no cleanup of anything. You just made a mess, drained it, made a lot of money, and then walked away. And only through activism and the environmental movement growing through the 70s and 80s did that start to become an issue. And the first time an environmental issue was considered by Canadian courts was a case in Alberta where an oil company went bankrupt, and the regulator, for the first time, said, you have 7 wells that are dangerous to the public. You need to properly cap them, plug them, and abandon them safely. You can't just walk away from them. It's not safe. The oil company said, no. So it went to court, and they fought it in court, and the company, the industry, had no respect for the regulator or the province. They came up with a scam where they came up with a solution and presented it to the courts misleadingly, saying, oh yeah, and they got the courts to sign off on the deal. But the deal included the company buying all their wells that remain producing, can disown any ones they don't want at the moment of signing. They misrepresented it at the court didn't notice, they approved the deal, so the new buyers was going to buy their stuff, except for those 7 wells you have to pay to clean up. That's going to cost me a few $100,000. No thanks, sign the paper, okay. So it went to court. They fought it in Alberta courts. The Court of Queen's bench said, yeah, you're supposed to clean it up. Yes, those are the obligations that come with every license of every well in Alberta. It needs to be returned to its former condition when you're done. You all knew that was your liability, your responsibility. But under bankruptcy law doesn't take into account the environment. It said, and if they make you pay for that, that's going to cheat the banks out of getting their money back, and so we can't. That would ruin the bankruptcy regime. No, so it got appealed, and that appeal decision was the first environmental case in Alberta, and they came to the proper conclusion that no, that's the general law of the land. You guys knew these were your legal responsibilities. The bank knew that these were your legal responsibilities. You have to clean it up. It doesn't matter if it messes up, if banks don't get some of their money. You all knew this is your responsibility, and that's the way it should be. And so on June 12th, 1991, when the courts made that perfectly clear, the conventional oil and gas sector was effectively bankrupt. From that moment on, the liabilities of the mess they've made and what they have to clean up far exceeded the money they were going to extract. They were effectively insolvent from that moment on, and they've remained so for 25 years. In the meantime, they had extracted more than $160 billion in profit just from crude oil and natural gas. They've paid themselves handsomely while they've run up hundreds of thousands more wells for which no one's ever going to clean up. There's no money set aside, and there's no requirement for them to clean any of them up. They'll be left to the public, ultimately.
Regan, if the court said that the companies and the banks knew what the responsibilities and liabilities were, and they had to clean them up, why did they not then start cleaning them up?
That's the rest of my presentation.
Okay.
So on June 12th, 1991, the court said, yes, you have to clean everything up. The government, the regulators, you have the power to require them to clean everything up. So what at the time was the RCB, the energy regulator, went to industry and said, guys, we have the power now. And it's called joint and several liability. It means if the company doesn't have the money to pay to clean it up, you go after the executives. If those executives don't have enough money to do the cleanup, well then you go after the company that sold it to them. If that company doesn't have enough, you go after the executives of that company. And so the energy regulator, the board, sat down with the industry and said, you know what guys, do you want us to hold you jointly and severally liable for this? No, 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 no. I said, well, what do you want us to do? So the industry said, well, we'll create the Orphan Well Fund. The industry will finance it and regulate it, and we'll be in charge. We'll clean it all up. And so in 25 years, they've reclaimed 700 wells, the Orphan Well Fund. In the meantime, hundreds of thousands of wells have accumulated that are inactive, abandoned, need to be cleaned up, let alone the hundreds of thousands that are still barely operating that will need to be cleaned up eventually. The Orphan Well Fund is what they did to avoid the responsibility of cleaning it up. And since that moment, the number of wells have continued to accumulate,
How much money is in that fund, and is it regulated into the fund?
There's an annual levy that is administered by the energy regulator and handed over to the Orphan Well Fund. In 25 years, it's added up to about $250 million they've collected, and they've chipped, and it's always been tiny. It's been like a $7 million a year budget to chip away with a little bit of stuff, to do the cheapest, easiest stuff. It's always been to buy time, to kill time. In the meantime, the correct analogy is the straw that broke the camel's back. The camel's been loaded and loaded and loaded for decades of none of this ever being cleaned up. And it's gotten to we'll get to how close we're going to be to breaking the camel's back. Throughout all these years, it's been continued to be loaded and loaded and loaded. But the industry didn't stop being scared of being held liable. And so immediately after that 1991 decision, receivers and trustees, they're the ones that when a company is about to go bankrupt, a receiver is who comes in, takes over your company, and operates it in the creditor's interest to extract money to try to sort things out. And the trustees are appointed by the courts to liquidate your assets to pay back your creditors. After this 1991 decision, trustees and receivers who worked for the banks stopped taking cases. They couldn't get anything done because they didn't want to be held liable. Because of this scam they did in 1991, the receiver, they'd already liquidated the assets and sold it off. And the court said, I don't care, you're paying for it. And if the receiver has to pay for it, I don't care. And so receivers and trustees wouldn't take any of these cases. They wouldn't be involved, and so nothing would get resolved. The companies would disappear and dissolve, but they couldn't be managed to address any of this. So they started pushing for changes in legislation, and they went federal. And they got bankruptcy law amended a couple times to help protect the receivers and the trustees, which was a legitimate concern. They needed those people to do the work. And they were partly just fading. But the real change they had made was in 1997. So they changed. They protect receivers, they protected trustees, but they still used that excuse. And in 1997, they snuck a sentence into federal bankruptcy law that basically said, in bankruptcy, you have a contaminated site, you have a liability, you can just you can just disown it. And nobody noticed that this had happened. They never used it. Only a couple of legal scholars that follow it closely made note of how dangerous this change was and how it was completely opposite of everything the government said in public, all of their public justifications for what these amendments were for, but they snuck this sentence in. And they kept it in their back pocket for 20 years. While they continued to load up liabilities, while they continued to drain profit from the industry, to load the companies up with debt, to more and more liabilities climbed and climbed and climbed until the moment the NDP was elected. And even leading up, so after 2007, they had an awesome royalty review. Very mild recommendations, but a very high quality operation. There was no backroom deals, there was no backroom meetings at all. Industry never got to meet with the panel at all. You wanted to say something to the panel, you got in line at public meetings, you sat down in front of them, you made your public presentation to the board, and you handed in a copy of your PowerPoint presentation, and that was it. The backlash after was dramatic, and I think the main reason for being able to extract all those dramatic royalty cuts that come immediately after that was the threat of the camel's back being broken. It wasn't that they weren't making money, it wasn't that they couldn't afford to pay more in royalties. It's that the camel had been loaded so much, there were so many liabilities in the industry, the entire industry was effectively bankrupt. And they said, you do this, we start walking away. And you get blamed for the destruction of the bedrock industry in Alberta. And the threat of going bankrupt was enough for the PCs, who were always their best friends, to give royalty cut after royalty cut after royalty cut, to change the regulations, to make the environmental regulations more lax. But then, when the NDP was elected, they were really scared. They thought the game was over. And so they started the doomsday machine. That 1997 amendment to bankruptcy law, federal law trumps provincial law. Our regulation means nothing because of that one sentence. 1 week after the NDP was elected, Alberta Treasury branches, Dave Mowat, forced Redwater Energy into bankruptcy. 1 week after the NDP was elected. January 25th, a couple months before the election, they still thought Redwater was going to be able to cover all of its debts to ATB. They thought things still look fine. 6 months into the price collapse, things still look fine. Crappy little company, run crappy. It had 20 producing wells and 100 old wells that it had no money to clean up, had no ability to clean up, and ATB lent it a whole bunch of money. 1 week after the NDP was elected, they forced Redwater into bankruptcy. 1 week after Dave Mowat, the CEO of ATB, was appointed to be the chair of the Royalty Review Committee, ATB informed the regulator that, yeah, you know those 100 older wells? We're not taking those into receivership. We're taking no responsibility for them. You can keep them. We're taking the 20 wells that still produce, and we're going to sell those so we can pay ourselves back. And that's completely contrary to a century of regulation in Alberta. They protested, and they started fighting, exchanging letters amongst themselves. And in the middle of the royalty review, that's when I was involved in October, when they had the expert group meetings as it was culminating. Middle of October, ATB went to the Court of Queen's Bench to apply for a trustee, to have a trustee appointed to sell those 20 wells so they could pay themselves back. A week later, CAT met with the Royalty Review panel to give them a presentation about the Orphan Well Fund and how it was about to implode and how desperate all these companies were. A month after that, they made their formal proposal to the Royalty Review panel explaining their solutions for how to deal with all these old wells. And they said explicitly that the Orphan Well Fund protects industry and industry protects the public. In December, the Royalty Review panel submitted its report to the government. From what I've heard from inside the party, the government didn't even want to publish the report. I can understand why. It's a fraud. They didn't want that report to be public. It's to justify further cuts. You can only do that through fraud. They've been warning the government the entire time about how the royalty review was going, what was involved, how fraudulent it was. They didn't want to make it public. Dave Mowat threatened to go rogue. He was going to take the report and publish it himself if they didn't make it public. The industry is so loaded with environmental liabilities, any straw can be used as the excuse to break their back and start going bankrupt. There's 800 oil and gas producers in Alberta. Virtually every single one of them is effectively bankrupt. Anytime they want, they can just walk away from all their mess. The longer they can stay afloat, they can keep cashing their checks, keep making pretend profits. But whereas the province is essentially being held ransom to the inevitable, the industry is going to go bankrupt. They already are bankrupt. The longer we let them continue to create, making a bigger mess, drilling another well, creating more liabilities, the more is going to be left for us to clean up. But they've turned that inevitable collapse into enormous leverage to extract ever more concessions from the public. That's why we get paid nothing. And that's why the NDP can have a review and say, there's not another nickel here for Albertans. We need to sweeten the subsidy programs. Then 3 months later in July, they announced more subsidy programs. Then a week after that, they announced everyone can join this new lower royalty regime earlier. And that's what we can expect for the next couple of years, is more gifts and more gifts hoping, it's like Weekend at Bernie's, hoping to take the dead oil and gas industry and still have it waving its hand on their side for the next election. That's why the Conservatives, essentially why the Conservatives died, because the royalty cuts, the austerity that resulted from that is what undid them. But that incredible pressure of trying to keep the industry afloat until the next election was brought to bear on the NDP. And that's what explains the dramatic about-face turn on royalties and climate change. That's why everything has to be such a light hand, because any straw can be used as an excuse to break their back. Because the regulators are captured, the way this stuff has been managed is a complete fraud. All you have to do is look at it for 10 minutes. There's no credibility. It's always been to hide the problem in industry's favor. But there's a relatively easy solution. In 1991, the courts gave us a super priority. Cleanup came first. It's perfectly legitimate. And the sentence they had inserted in 1997, it has a fake super priority. There was a fake clause that they used to sell it that, yeah, the government will have, the Crown will have access to contaminated land to sell it to help pay for the cleanup. So that'll help balance them being able to disown these liabilities. But that's a farce, because contaminated land has a negative value. So they get to walk away from liabilities. Us getting to have negative valued land is no compensation for letting them walk away from everything. We change that one sentence, would give us the super priority, as it should be. Cleanup should come first. They all know it. The banks knew it when they lent them the money. The oil companies knew it when they drilled the well. They all knew they had to clean it up. But it has to be federal. Even if the NDP did try to raise royalties, did try to have a higher carbon tax, the companies could just walk away. They could declare bankruptcy and walk away. You could say, clean that up. No, I'm leaving. Taking my money, bankrupt. The problem is yours. Now that court case, it was decided shortly after the decision. Redwater came out shortly after the royalty review. The courts endorsed it. They said the sentence in 1997 says they can walk away from all their mess. And the Supreme Court certified that principle in a case in 2012, so we can't do anything about it. The government appealed it. They're going to lose the appeal. The appeal court is not going to step on the toes of the Supreme Court. They're going to have to fight it to the Supreme Court. But changing that one sentence would be fairly straightforward, and every Canadian should be worried about it. Every nuclear power plant, every pulp mill across the province. You don't have to clean anything up. You don't have to be responsible. You can load the company with debt. You can just walk away in bankruptcy. Change that one sentence, changes everything. And that would cause the banks to actually regulate those companies to make sure they are being environmentally responsible, because the banks would lose their money. If we had this in place, even a little company like Redwater goes bankrupt, it's going to sell stuff for $5 million to pay back ATV. That would be it's not nearly enough, but that would be $5 million we would have to start cleaning up their mess. And the same would be true with every other of the hundreds of companies that have long since been effectively bankrupt. We would seize everything of value that has theirs, and we would use that money to start cleaning up. It wouldn't even be remotely enough to clean up their mess, but it would be an incredible start. But unless we change that one sentence in federal bankruptcy law, we can't make them do anything. They can walk away with their pockets stuffed full of money. That's the blackmail the province has been under for the last 10 years. And that needs to be removed in order for the government to be able to pursue any of our wish lists. We can't make them clean up stuff. We can't charge higher royalties. They'll go bankrupt and walk away. There's literally hundreds of them. Anytime today, they can, and they will. And that's clearly the threat they've made to the government. And they didn't want that fight, so they've been forced to continue the same policies as the previous government.
I don't understand.
Regan, is that the end of your presentation, or okay?
There's a bit of a disconnect for me between you saying that that they're effectively bankrupt, and you're saying that they're still making mega bucks on the production. Are you saying that even with all that mega money they're making producing the oil, if they had to clean up, their liabilities exceed their profits?
Yeah. there's still, when you don't have to clean anything up, when you don't have to set anything aside, when you're just making a mess, there's profit to be made. But in reality, there is no profit. If you had to cover your liabilities, there's no money for them to pay executives, to pay shareholders, to buy share buybacks, to pay dividends. But as long as you can ignore the liability side of your sheet, I showed you
So
how
they
much.
externalized all the
Absolutely.
liability onto the environment,
Yeah.
onto the earth.
And to the people.
Albertans, there's almost 500,000 oil and gas wells in Alberta. There's over 400,000 kilometers of pipelines in Alberta. There's 23,000 oil and gas facilities. It's going to cost hundreds of billions of dollars to clean all that up. There's nothing. There's no money for that. There's no requirement for them to do it. You just make a mess, fill your pockets, and walk away. And now,
Advertise the oil from oil program.
oh yeah, you need a window dressing.
So in closing then, and I think Mary introduced this, you said that on the asset side of the sheet, no matter how low the oil price is, they can still make a profit, virtually. However, at the end, when another company buys them up and sells off the assets, they can walk away from the liabilities and leave that the responsibility of the taxpayer. And so that's the challenge then is to, my understanding was that in the beginning, they were required to put aside bonds or assets for that reclamation and cleanup. Wasn't there some requirement?
There was recommendations for that in the 90s that, because from an economic perspective, it doesn't change the economics of a well, whether you pay for the cleanup on day one or at the end. You're drilling that well, there's so much money to be made, there's so much money to clean it up. From an investment perspective, it's the same, whether you front the money on day one for the eventual cleanup, or they let you wait until the very last day to ask for cleanup. The problem is on the last day, there's no money left. From an economic perspective, it could be, and it's hard to argue against. That was one of the recommendations in the mid-90s, is you should have to post bonds. When you drill a well, post some money for the cleanup. Those recommendations were discarded by the Klein government. They actually, in 2000, when they revised the Orphan Well program, and they added in reclamation to their responsibilities, when they implemented the new legislation, it had a very good rule in it. It said you can no longer sell these old wells. When you have inactive and old wells, you can't sell them off to other people. That was great. That was going to force them to clean up, because if you wanted to sell stuff, you had to clean up those liabilities. Within weeks, industry went, "What? What did you just do?" No. So the government put together a task force and came and amended all the new regulations they put in and changed that rule. And that's how the industry has worked from day one. All the big boys who made all the mess for decades, who drained all these wells down to nothing, they packaged them into little groups just like Redwater had. 100 old plugged wells that produce nothing and are just a huge liability. They sell that to Jim. And they give him 20 wells that produce a couple barrels a day. And so this one company of 120, that would pay Jim and his wife to run a little company and keep it afloat. He has no hope of ever cleaning up that mess. He has no ability to ever pay for anything. And that's how all those liabilities have all rolled downhill. And now they're held by tiny little nothing companies. They can go bankrupt. And there's only, Jim is the only one liable for all of that. And they actually, when Klein introduced the legislation, it was supposed to prevent that. And they said, "What did you just?" No. They said, "Sorry, sir," and they changed it. And now hundreds of thousands of wells have all been funneled down to tiny little corporations, Alberta limited companies, and that's where they sit. Where he made a living running 4 old pump jacks, sitting on all these liabilities. And when and Redwater went bankrupt at $100 a barrel. It ran itself into, it was complete mismanagement. It had nothing to do with the price of oil. And that little company goes bust, and now the bank gets paid first and nobody's cleaning anything up. And there are hundreds of thousands of wells today that are abandoned, sitting inactive, that need to be cleaned up, let alone the hundreds of thousands that are being operated. And they're all going to roll like that, and they're all going to be left in the boat. In the Alberta Law Review, peer-reviewed law journal in Alberta, two partners from a big law firm in Calgary and an associate. They wrote a study about who's going to pay for Canada's Asian oil and gas infrastructure. And they go through all the rules, and they go through that Supreme Court precedent that set the table for this, and they conclude it's the public. There's no way to hold any of these people liable. There's no funds, there's no rules to make any cleanup. We're going to be responsible for it. So we're soon going to be inheriting hundreds of billions of dollars in liabilities, and the industry's going to walk away with their pockets stuffed. And we are giving away the last bit. Climate change is a real thing. There's a limit to how much oil and gas we can responsibly produce. And they are stuffing their pockets with every last dollar, and then they're going to walk away, and Alberta's going to be left with the nest to clean up.
Okay, Mary, you've asked a couple questions. Let me say somebody else.
It's not actually a question. I just want to say, if this is the case, but if the public has no money, then our issue about the impact of climate change on the rural parts of Alberta should definitely include the fact that rural people are going to have to live with unreclaimed wells for the perhaps long-term future. It will just sit there and do whatever it does because there's no money to clean it up. That's part of our climate, our new climate.
The choice is between getting $3,000 a year in lease payments for an old well sitting on your property, or being stuck with the $300,000 to $3 million bill of actually having to clean that up. They're being.
But what if nobody cleans it up? There's no money to clean it up, it's just going to sit there, right?
Then you'll stop getting your annual lease payments.
Bruce,
Bruce,
I want to just make a comment. Under the tailings pond reclamation plan, when they were proposing that, they didn't have to come up with a reclamation plan until 2 years after they shut the mine down.
Right. And this is hundreds of billions, this is just oil and gas. Oil sands are the world's biggest environmental liability. And it's being managed by the same people, the same regulators, and it's the same system. There is no money set aside to clean up any of it. There's no rules for them to clean up any of it until long after they go bankrupt. It's another enormous thing. But there's a lot of money being made up there. In oil and gas, there's no money being made anymore. You look at I have all the numbers, I calculate all the profits for the whole industry. Since those 2010 royalty cuts, where they became, on paper, dramatically more profitable, the industry's lost money. Even at $100 a barrel, the industry was spending more money fracking wells than they were getting in revenue. Even at $100 a barrel. They lost money in 2010, 2011, 2012, 2013, 2014, 2015, 2000, and they're losing money today. The industry is long since bankrupt. The reason they were losing that money is because they're fracking new wells, proving up new reserves that they take to the bank and take out more debt. To load themselves up with debt, which is the poison pill that we can never ask any of them. For the last 6 years, they've been fracking wells that has had a huge consequence for rural Alberta. Huge environment, plenty of people have been severely affected. And they've done all that to prove up reserves, which you take to the bank to assume more debt, which prevents us from ever being able to ask anything of them.
Okay, I've got Callis and then Sadie, and then I'm going to put a limit on the discussion. We're going to cut her off at about 5:02 because we got some other business to do, and then lunch, and then I told Brent to get a little time over lunch. So, Callis?
Thank you very much for this excellent topic. I'm a geologist, so I'm kind of like my mind-blowing thing with this thing. Have you ever thought to talk in the CSPG convention, like Society for Petroleum Engineers and Geologists convention?
Oh, I'd be happy to talk to
because
anyone.
What I believe is like there are too many propaganda going around that about this oil review and this oil thing. If you talk, people will know. Like the people who claim themselves scientists or technical persons, professional people, I need them to hear this thing and see this thing. So, okay, yeah, I'll try to. I used to organize. I used to be one of the organizers there. That last couple of years.
And later, Brent and I have been proposing a plan to the government for more than the last year about the industry. We don't need to drill any new oil and gas wells. We don't need to frack anything else. But all those people, including the 40,000 that have been unemployed, can go back to work cleaning up the mess. There's decades of work. This is the industry needs to be held accountable, the banks need to be held accountable,
Yeah.
but it doesn't mean it's gonna disappear. There's decades of work in every corner of the province to be done to clean up this mess, but it's actually a positive in the long term, and certainly for Alberta, it's not gonna work quite out as good as the industry and the banks have done for themselves.
Okay, Sadie?
I was just struck by a commonality that I see between what you're describing in the petroleum industry and the experience in the agricultural industry with the way agribusiness and the agricultural economic schools of economy and such in the, I don't know, starting in the 60s, maybe even earlier through the 90s and so on, were arguing for that farmers needed to go to the banks and get more money and invest that in their operations and get bigger and take on more debt.
That's right.
And constantly expand and get new equipment that ended up having devaluation and more debt and more repairs and get on a treadmill cycle that they then could not get out of. You would have really enjoyed being here yesterday and hearing the presentation of the farmer who bucked that and got out of the debt. But I see such a correlation between what you're describing here with the way they're treating the oil reserves and the way the advice that was given to agriculture and farmers from the professionals in the agribusiness industry for decades.
Okay, I want to close this part of the discussion and move back into our election readiness agenda. There'll be time over lunch. We've got some hot lunch being cooked in the oven, and we'll have time at the end about 12:30 for that. The NDP currently has 55 seats. Are we counting Deborah still?